All right, so let's get this started. This is the Friday Night Strategy Podcast for August 28th, 2020. So let's take a look at what we had today. So we looked at yesterday and I spent a lot of time considering the potential downside of what looked like something that could easily become, a turning point outside of Z2 that ended in a doji. And we explored yesterday pretty thoroughly how this could easily come down and break through all of the resistance and come down and test the 10-day low. We took a look at the 10-day low as really the boundary, because we would have had this and then back. So this 10-day low is acting like the boundary of that move. So we explored the possibility of a symmetrical move. Okay, so we were ready to be tactical in this space inside this triangle, but if it had broken down below the 10-day low, then that would have been the signal for us to get short and then explore the downside. So we were prepared for a tactical day today. And we also did explore the upside too. And so what we got was a slight gap up. Slight gap up in here. Let's try that again. Yep. So we had a slight gap up, sold off a little in the morning, and then powered to a pretty nice close going into the end of the week, and closed at a new 10-day high and a new 30-day high. At 350.63. And that's kind of what we forecasted yesterday, that if it opened approximately where it closed, that this would be about a 1 ATR move, and we said it could get to 350 and some change, and it did. Now to the upside, really there is no resistance overhead whatsoever going into next week, and what we have is Z3. That's should be a little bit higher, about 358, let's call it. And that would be actually, a full week, almost a full weekly move. With the ATR percentage at about 0.9, that would really represent almost 7 ATRs. If it were to go from here higher, that would be almost a 7 ATR move. Now, that's the kind of move that we just saw. To get another one of those would be amazing. I'm kind of thinking this feels something like a Republican Trump bump from the convention, which was by all accounts much better than the Democrats. And so it's hard to see that we'd get another week like that, but again, crazier things have happened. So the upside is kind of unbounded, unconstrained, no resistance overhead. If this were to break down, we would be looking at a break of the Z2 line at 350 even. The RL10 price is here at 349.36. Then there's really nothing until it gets to the edge of the dragon at 344. The size of this move here, the 1% sell-off, would get us down to the baby dragon and the RL30. Right? So Skin of the Dragon at 344, the RL90 at 343, Spine of the Dragon 342.5, the Z1 Edge of the River 341.6, Southern Skin of the Dragon, and what will be Monday's PSAR right in here at about, call it 340 even. Today's PSAR was at 338, and we're still far, far away. 10-day low, still at 335.5. That's going to be the 10-day low for a while now because it's and that was made 7 days ago. So this solid support 335.5. Meanwhile, the Bollinger Band mean continues to march northward and is now at 333.5. If that breaks, then that really invalidates the the last 20 days worth of price action, and that's why we said the 10-day low is going to be key, because if that were to fail, then this entire move up is negated. So Bollinger Band mean 333.5. Peak RL270 fair value is at 326. The Z1 line at 325. And just in terms of magnitude, this or 5% line brings us basically right to the Bollinger Band mean. 2.5% sell off gets us to about the Z1, and then the 1% sell off would bring us right back to about 346, which is about a 2-day low. Further down the stack, you can see the rest of the Trail of Tears if it were to fail. Z1 at 325, the 30-day low at 319. So this thing has basically moved 10% in 30 days. That's an amazing performance. This just enjoy that. Enjoy the feel of that. From the 30-day low made back here, a 10% gain all the way up. That's just as strong as it can be. Still a long distance down here past Z2 down to the long-term fair value, and at this rate, it'll catch up probably by mid-September. Is if this price continues to move northward, the current fair value will get to the peak fair value somewhere around mid-September, and so we can really look at the move from the RL 270 up to the RL 10. That's the regression line fractal framework. So that's how strong the traders are that have been able to move this thing northward, and most of that has happened like in the last 30 days. A move of that magnitude. It's quite extraordinary. From 313 to 350 is $37. That's like 35 daily ATRs stacked on top of each other. No, that can't be right. That's 12 ATRs. That's correct. Because it's 1%. Man, I thought I was losing my mind there for a second. So 12 ATRs north. Let's take a look at what worked. So we'll start with the U.S. indexes first. There's the S&P at 0.65. The diamonds, which won yesterday, were in close contention today at 0.58. So they held up pretty well. And then the Russell was just slightly better at 0.85. Next up, Take a look at the sectors that were better. So healthcare was just marginally better. Okay. Tech at 0.88. I'm going to include the big tech leaders in the FANG. That's Facebook, Apple, Amazon, Netflix, Google. We're basically the equivalent of the market today. There's materials at 0.19, 1.19. And with emerging markets and oil exploration at one and a third. While we're here, we'll take a look at the triple techs. The broad tech sector at 2.5-ish. The tech leaders at 1.5. So again, it was the broader sector that had the advantage today. Energy made its nice recovery. Yesterday, it was just at the tail end of a real beatdown. And that response, so energy and clean energy both came in with 1.73, 1.8. Silver, 1.8. Mexico, which along with Brazil had gotten smashed, 2.7. Wheat and precious, 3%. Simon Property, 3.3. Brazil had just a rousing day, 4.6. So now we can take a look at some of our companies on the upside. Nucor lagged its tech sector a little bit, better than the market, but it lagged its tech sector a little. And in the pair trade, Nucor Steel 0.97, U.S. Steel 3.38. So again, U.S. Steel is just an amazing intraday trader as well. It's very liquid. Shares are inexpensive, has lots of volatility, and it's usually much more extreme than its counterpart in XLB. So when XLB is up, it's not unusual to see this up big. And if XLB is down, it's not unusual to see U.S. Steel down big. So in the battle of the metals, there's Nucor at 0.97. There's Alcoa at 1.9, Cliff 2.5, and then the big winner, U.S. Steel 3.3. Among the techs, we could see there's Microsoft, a solid 1%, Virgin Galactic 1%, Twitter 1.6, Intel 2.1. Walmart had another strong follow-through day, 2.7. It was the big winner yesterday, and today was that second day of momentum, so we got rewarded by staying with the continuation pattern from yesterday. Devon Energy was up 3% on a day when energy was up 1.8, so more power to Devon as well. NVIDIA was at 4% in the chip sector, and Nikola and Wind. So quite a broad base of companies that were better, although only a handful of sectors were better. So let's come down and take a look at what underperformed today. There's three there in Japan, finance, and healthcare. So finance was big yesterday, but lagged a little bit. So again, this is still a market that is favoring the stock pickers and the rapidly adaptive. There's treasuries basically flat. And then some losing companies down here. Home Depot continued to give back a little. Cisco and Apple, Amazon and Facebook. So there was some weakness in some of our traditional tech leaders there. You see Amazon and Apple, Cisco, that's what contributes to the underperformance of TQQQ. The broader tech sector up 2.4, TQ's down at 1.5. Okay. You may want to just grab a screenshot of that one. I'm doing some work on mind mapping and the systems thinking course that I'm putting together. And so this is a quick mind map that shows the continuous process of ideation, where you combine idea generation, which is like exploration of the cognitive space, and then idea evaluation is looking at the quality of that idea. Does it make practical sense? Can we exploit it? So experimentation or exploration and exploitation, and then standard factors that as we try to combine creativity with critical thinking, this is how you make that connection. It's customary to spend a lot of time trying to generate new ideas as if creativity was an end state. It's really not. It's just one of the steps along the way. But the harder thing to judge, that you pay more money for, is the evaluation of the ideas. You can actually hire creativity, but hiring judgment to evaluate potential is a different case altogether. And these are standard practices in decision theory, and give some pretty good advice. So probably worth a screenshot. Let's see. All right, just want to take a quick look at some charts that have been posted. I think this was a little earlier in the week, and I didn't see that one in time. This goes back a little bit from the Kata room. Nice work in Apple that has a Z3 pinch, a second position, and then a good sniper exit for a couple 3R, sorry. I think it's Pavel's. Another one in Apple, a very nice series, especially after the excursion and then the pullback. I like the capture, and I love the reentry, getting 2 scoops in, and then sniper exit and a managerial exit for 5.5 hours. So feels like Pavel's finding his stride. Griff Cooper, taking a look at the supported spring crossing in United Healthcare. So he sees the nice, big, strong winter, sees it finding support down here at the 90. The 90 has started to roll up. PSAR flip, buying it at the usual spot. Makes the no lose plus dinner for 2 move, waits for the Bollinger Band mean to catch up, and then basically elects to adopt the, looks like the PSAR right here, and makes a nice sniper exit and then the managerial exit. Nice work. This one is an accelerated manager because normally it would be this Bollinger Band mean, but he gets this one. No, that can't. I'm sorry, that's the Bollinger Band mean. Sorry. So he's got that right. Then Griff also in EWZ finds the second leg of a harsh winter, and I respect not being able to get out here, but if you had gotten out on the pullback, then the reentry when the spring becomes summer, makes a nice Wu-Wei exit and takes a sniper here. Pretty good shape. Nice work on that. This is from Bill Scheit, and yesterday he gave us the really nice trade on gold, and here he's showing us how he's using the swing trading 1 day at a time elements of excuse me, of the daily report. And so he was interested in McDonald's. McDonald's was like the number one symbol where the RL10 had moved well beyond the RL270 to the point where it was 11.5 ATRs beyond the long-term fair value. So in the bottom set, these are the ones in red that are like overheated, and this tells you how many reward to risks, how many ATRs are between the RL10 and the RL270. So Intel, GE, Cisco, they are all lagging, but McDonald's, Procter, Apple, Disney, Home Depot, these are all the relative strength leaders. And so trade number one, he plays the supported spring crossing. There's a nice fall into a winter. Winter reverses. He buys the breakout above the dragon here with a nice tight stop at the SSC, and he just uses the PSAR for standard exit for 2.5R. This one he tries another supported spring. He was in the same way I think that he front runs here. He tried front running here. It failed pretty quickly, so he gets out fast. He got some slippage, so he exited here, but he didn't actually get the fill till here, and then this became stop and reverse. So he makes 2.5 on this one. He loses 1 on this one because of slippage, but the short position here pays off for almost 2, so that's 4.5. So that's about 3.5 R. And he's making some notes here to highlight his insights about the relationship between the PSAR flip and the MACD seasonal change. That's the two timing elements of that crossing of the dragon. And so he's working his way through some of the math and adapting it to his own rule set. So he's doing the work to refine his black belt presentation later this year. Bob Rourke kicked in a few other ideas on how to look at the MACD. Bob uses the slightly different versions of the MACD, where he's using the 430, and he uses he also looks at an RSI 8 to help get some earlier timing. So he's adapting the strategy to his own time preferences, and so he's just working. He and Bill are working together to examine different ways of fine-tuning the indicators to their own use, and that's a best practice, that collaborative learning group. Okay, so that's that. I want to get into the daily now. And oops, let me find the weekend report. Oh, Griff's got some pretty nice rules. Let me, before I get this open, let me just remind you that Griff had uploaded some excellent trading rules here inside today's chat room, and that's the rule set that was helped govern, the 3.5R that he pulled out on today's trade. So that's pretty well done. Okay, coming into the end of the month, so we're about due for another rotation in the that blended monthly rebalancing structure. And let's get going here. Okay, so we are still well into the bullish quiet. That's favorable to the long side. Overbought on every measure, every look back period. Almost 12% above the 200-day moving average. ADX got to an amazing 40. ATR percentage at 0.88 is incredibly quiet. And then the risk Z is still favorable to the long side, but we notice that as it's coming near the zero line, that gives us a concern about warning, because the last time it did that, there was about a 4 or 5% sell-off. At the same time, it happened here, and here. So anytime you're approaching that zero line, the market becomes a little more vulnerable. And in this case, that vulnerability is coming from uh, a very strong bullish move. So the holdings for this month have just been excellent, and the addition of Wheaton and the clean energy has really paid off well in the core holdings. The current leaders in the clubhouse are basically the same ones, so the winners continue to win. And then in these are showing you the same relative strength leaders on the basis of that same lens. ETF2 is still strongly exposed to the market at 100%. The month of August would not have predicted it. I mean, it broke well above the previous Z3. So to me, all of this move here is the excess gains that we weren't entitled to expect. So to me, I can't see how you have a stop lower than 335 on the weekly basis. And then if you wanted to keep half of that, you'd probably be about 345. So you'd give it about 2%, which is like 2 daily ATRs. And that doesn't feel irrational to me at all. But just, this is Bob Rourke and I were talking about this. That's what $15 trillion of federal money looks like. You can buy a lot of cheese with that. The weekly health check accelerated and just got a lot better. So there'd been a creeping grind the previous 3 weeks, and this week just kind of blew it out of the water. And now it's halfway up the stack to Z2. To me, a weekly low would get you in there at about 340. If you wanted to keep half that stack, 345 again seems to be a reasonable posture to me. Quite a nice recovery in there, and the PSAR's 15 weeks and growing. And I just want you to see the power of the crossing of the dragon, which would get you into this move from about 290. So the move from 285 to 250 is $65 that's a 25% move. So even if this first leg up, which then paused inside here, and now you get the second leg up, that's another 25%. So there's real power in this weekly chart. The daily we've already looked at. All techs all the time. The U.S. indexes, the S&P and the Dow, holding their own. Mid caps are lagging. They don't get the same bailout treatment, and then the speculative is lagging. So I take this as evidence of all that Fed money going to the safest sector, and that's the U.S. large caps in tech. That's what all of the bigwigs are betting on, the deep future, that no matter who wins, that they're going to need tech to maintain our position. Looking at ETF 22, again, it adds XLK. Consumer discretionary has done pretty well. Energy, utilities, and real estate, those defensive plays, just not getting it done. And even treasuries have not acted as a store of value there too. That doesn't much look like the risk-free rate of return, does it? ETF 32 portfolio, again, here's the beauty of clean energy and Wheaton precious metals. Have had pretty good run this week. Clean energy has been just amazing. I've got money in that one. But, that's the only thing's better than tech right now. Oil exploration and energy, again, pulling up the bottom. This little bump in Brazil was due almost exclusively to today's performance, so let's be careful on that one. Looking at the Dow 30, the new addition of Salesforce, or so Honeywell is going to be added here. So Honeywell had a pretty good week. Microsoft was amazing this week. They would normally be in the green. It's just that CRM was so off the chart good. And where was the other one? Was it Amgen? Yeah, so Amgen was the other one that's going to get added to the Dow. So all of the three additions to the Dow, Honeywell, Amgen, Salesforce, all were dominant. And so let's look for continued behavior like that in the week ahead. Sector spiders, it's tech. There's some software. That consumer discretionary, which is pumped up a lot by Amazon, is hanging right in there. And again, just notice that the losing sectors continue to lose while the winning sectors continue to win. And that's why you want to study the extremes. ETF Max, plenty to choose from. Silver had a nice recovery. But again, hard to argue with clean energy. The regional report, tech all the time, consumer discretionary, just that's what it is. This is the Qs. And mid-cap value, which is expressed by IJJ, suffering inside the U.S. Singapore suffering, but China and Australia doing okay. Sweden and Germany doing okay. Silver just on a tear compared to gold. The winners continue to win. So all green all the time. Just playing those is reinforcing trend following. And there was no real new strength that emerged this week. This was a reward of the long-term keepers. All these in the green are the ones that are both liquid and volatile enough to do intraday trading or shorter-term swing trading with. So it's going to be your biotech, gold, Brazil and energy, gold miners, silver, and gold. Just going to take a quick look at the bottom. Again, it's that whole energy sector. And nobody even loves cash. Back to the daily report. We've seen most of this one already. Johnson & Johnson, Coke, Honeywell, Visa. The Max Payne, Devon Energy, Conoco, Chevron, Gilead Sciences, Chevron, Apple. I think this is, Apple should be on our stalking list. Handful of dojis today. These OR shorts, these are ones that had been relatively weak. So American Express, Intel, and although they've been doing well, those would be the symbols that would be most vulnerable if the market began to reverse. Walmart just getting it done. Breakout on every dimension. Visa also getting it done with the big index breakout. Coca-Cola, nice big pop today, and Intel did well today. So when we're looking at these index numbers that break out, that means that was a breakout above the previous look back period. So American Express also had that breakout today. So that becomes something that we could consider for a continuation play. Salesforce gave back a little bit, down a couple percent. Pinch and stretch, all the usual suspects. Cisco, gold, and treasury. So gold actually has some more room to run. So the nice little rebound in it today is not the end of the story. There's still plenty more of that, where that came from. CAT, treasuries, Apple, and Pfizer for the pinch conditions. That's where we're setting up for a Z3 pinch. Chevron, treasuries, XOP. I like those. I especially like XOP. It's so volatile. Using about $1.20 as the range risk. This is where Bill found that nice trade on McDonald's today. So the other winners, Procter, Disney, Apple, and Boeing. The symbols that are the most ATR above their RL270, relative strength leaders, and they could be candidates for continuation long side plays. So one-day pops, these are symbols that had unusually narrow ranges. Silver, Cisco, Apple, like an apple. A real distinction in between the winners of the summer and those that are lagging a little bit here. We've seen the large caps have been defeating the small caps, so the Russell is still in the fall, hasn't turned around, whereas the S&P and the Qs are both at the top of the stack for the summer, with a Z-score of better than 2. There's McDonald's in the summer, and the fact that it just got into the summer, so it's still well below its Red River with a Z-score of minus 1.17. Whereas Microsoft, Honeywell, Nike, and Verizon, these are all well above their Red River. That's how you read that. So McDonald's is early summer, Microsoft and company late summer. Some big breakouts again today in the usual leadership suspects. Visa just running away with it on every dimension, and Walmart just doing great. Wasn't that long ago we were wondering why Walmart was lagging so much. That was when you see the anomaly and you have opportunity to buy quality on sale. All the big breakouts among all the winners, and treasuries just cannot compete right now. Slope of the 30 still looking strong. We have now exceeded the previous degree of stretch above the 200, so this is actually a sign of genuine strength. It's stronger than it was before the sell-off. That's what that means. Not quite overheated yet, but you could see how that could happen from this price level. RL30 is very healthy, abnormally healthy. The 90 is abnormally healthy, and the RL10. So just supremely brave and bold. I worry about this all the time. But so I'll let the trade surprise me into it and just follow my rules. I'm try not to get carried away with enthusiasm. Okay. I'll just show here that the S&P over the last 5 days, I haven't talked about this one that much, but I'm looking at the exceptional move of the last 5 days. Has a Z-score of 1.4. That's the only one, that one so the 40-day move is a Z-score of 1.3. So we'll look at the 40-day move first. So compared to 40 days ago, the market is up 9%. And the average 40-day move in the last 10 years is plus 2%, but it's returned 9%. And with the standard 40-day standard deviation of 5.3%, that you do the math, and that gives you a z-score of 1.3. So this tells you that this is well above average, that move. It says it's 2% plus or minus 5. So 7.3 would be the boundary to abnormal. And the 5-day move is up 3.3%, which gives it a z-score of 1.4. So the average 5-day score is only 0.3, but it's up 3.3. So that gives you, those are the two look back periods that have the most exceptions. So longer, I would almost call this longer term swing and short term swing have both been remarkable moves. Okay. So that makes me want to preserve that profit. I want to take a look on this one on the ADX, the S&P. So we saw from the earlier reading that the score was 40. So when I look at the S&P, here's how I read this chart. This is over the last 500 days, and it uses ADX 14. So the average ADX is 24.9. The standard deviation is 8. Okay. So that means if you add 8, you get the Z plus 1 is 32, Z plus 2 standard deviations is 40.8, and today it was 40.1. So when you do the math, the z-score is 1.9. So it's almost 2 full standard deviations of strength of trend. That's how powerful this move has been. And in the last 500 days, the best reading ever was 49.5, which was a z-score of 3. So this is not as massive as it's ever been, but with 2 full standard deviations above long-term average, that tells you how strong this current trend is. The only thing's better, so the most strongly trending symbol is consumer discretionary from the strength of Amazon. That's 2.6. So all of these in the green are the ones that are exceptionally trending. So when you have the diamonds and silver and tech and the S&P, staples and discretionary, that tells you where the strength is. It's all U.S. all the time, plus the defensive play is silver. When you look at the extremely non-trending, the sideways movers, the weak ones, that's energy, real estate, Europe, and coal. So there you are. Treasuries are just right along in their historical average, so nothing unusual there. So that's how you read this one. This is actually a way to find the strongly trending ones when they come out of the pack. So like when this is the database average right here between the yellow and the white. So as things start crawling up this stack, that's how they begin to distinguish themselves in terms of how strong is the trend, how strong is the swing trend, and that's what ADX 14 is really well suited to do. Okay, so I'm looking for abnormally strong ADX candidates could experience sharp reversals when the trend cracks. So that gets me into the mindset of make sure that I preserve more of the large gains. And that connects to yesterday's briefing. Okay. This gives you kind of the same look, only holding it for different time periods. So if I hold it for 40 days, 20 days, 10 days, 5 days, different swing patterns, and then I just use a set of standard standard tradables. So when I look at the z-score for 40, if I was looking at longer term, I would say, wow, treasuries have really underperformed over the last 40 days. They have a z-score of minus 0.86. So it's really starting to become noticeably weak, surprisingly weak. Exceptionally strong, here's the Qs, 1.5, 1.55. And so by looking at these different holding periods, I use this technique to help me estimate how abnormal is the gain of the thing that I'm owning, to know when I should start being more concerned about profit preservation and not treating it like just a normal trade. You can also get a sense when you look at the z-scores, you get a sense of where the broad market is as well. Okay. And the rest of it is standard technical stuff. Okay. That's everything I got for you today. Doggies are looking at me. They know we're supposed to be on our walk by 10 o'clock local, so they're looking at me cross-eyed. Take good care. I'm going to record something for tomorrow, and I'll have it published by 8 p.m., but we're not going to do a morning podcast because we got a soccer match tomorrow morning. Okay. Take good care, guys. I will see you tomorrow or the Sunday evening trade frame review. Take good care.